Yeah, we had $14.5 million. That was 88% of our capital. The company was basically like dead in the water at that point because it just didn't have the cash. But ultimately, no matter how bad a situation is, I kind of just believe that you'll always make the same decision, right? It's like a fight or flight reaction. A lot of these problems can just be solved with the promise of the technology behind crypto, with trust minimization and transparency and verifiability and all of the things that allows blockchains to tick. Ultimately, what we'll see, and I think what a lot of exchanges like Backpack are doing, is this kind of concept of a DeFi mullet, where you have a centralized exchange in the front, but DeFi in the back, where whether it's a lending protocol or trading itself, you should be able to tap into these primitives on the back end while you still do all the things that users love and care about on the front end.
Welcome everyone to the New Money Podcast. Welcome to the booth. As usual, we've got the Lydian lion behind me, the oldest coin in the world. And in front of me today is Armani Ferrante from Backpack, who's shaping the future of money and is with us today. Great to have you.
Great to be here.
So Backpack Exchange is coming to Europe, just acquired FTX EU. And we've talked to a number of people on your team, including a person called Q from your marketing and growth team. And she said you're kind of a mix of a Silicon Valley product dude and an Italian design icon. Which I thought was funny. And she walked us through an episode where you've got this attire today, like the classic startup attire, but you guys went to the New York Stock Exchange and you just pulled up in a fresh suit out of nowhere. And she says that there's this certain kind of like aesthetic angle to you, and which also transcends into how you run the company. And I wanted to open up and kind of like ask you this question. Like, what's your favorite part about the Backpack ecosystem, Backpack product aesthetically? Which one do you find most aesthetically pleasing?
I mean, I think it's so funny that you open up with this question. I've never been asked a question of this flavor, so it's a bit of a curveball. I love it. I think what I love about Backpack is it's such an accurate symbol for what we're building. So we started with the wallet, and I can pull out my wallet out of my back pocket, and it's wallet's a small thing, right? I have like some credit cards, my ID, some cash maybe, use it for payments and live my life. A backpack is a much bigger metaphor where I might have my wallet inside of my backpack, but I could have so much more, right? I could go rock climbing with my backpack. I can go snowboarding. I can go sail the ocean. I can go on all these amazing adventures where I can not only use my backpack for finance or for, payments, but I can use it for everything. And it's this very inspiring metaphor for, I think, what we ultimately trying to do with the product, which is, not to build a wallet, not to just build an exchange, but to build this all-encompassing financial institution that can tap into every part of the global economy, whether it's the on-chain economy, and whether it's Solana, Ethereum, Bitcoin, Optimism, Base, Arbitrum, you name it, whether it's fiat currencies all around the world and one of the many heterogeneous payment rails and different regions, or whether it's equities or traditional assets. The backpack is ultimately this, I guess like audacious and bold kind of statement of, I want to go on this adventure and, dare to do all the things that crypto has dared to do to the most important, but also the most just entrenched industry kind of in the world, namely finance. And so it's this really, I think, compelling symbol that packages all of this together into really a universal icon that everybody knows and loves, right? Whether it's a kid at school, whether it's a crypto degen trading meme coins, whether it's a more serious person thinking about, their, life savings, or whether it's, a teenager playing an MMORPG in World of Warcraft. It's a really kind of unique symbol that I think transcends, a lot of, just crypto more generally. And there's very few companies or brands that have such a universally recognizable icon. Now, that's not to say that Backpack is at that level yet, but I certainly take a ton of inspiration from companies like Apple, for example, which is like my first job out of school, where, the Apple icon is, it's obviously it's not a backpack, but similar. It's very similar in spirit. And so, yeah, I would say like the symbology and the thoughtfulness behind the brand, I think, hopefully it emerges in the product. And I think represents, I think, all of the craftsmanship and hard work that goes into it. So in any case, that's probably more than what you asked for, but that's kind of how I think about it.
No, I like it. Do you guys own the backpack.com domain?
We don't own backpack.com. We own several backpacks, but not the .com.
Did you try hard to get it, or what's the story there?
We tried. It seemed like pretty hard to figure out how to get it. So ultimately, it's the URL is one thing. I'm not necessarily super, worried, or it's not really a priority, to be honest. The product makes the URL. The URL doesn't make the product.
Yeah, I feel you. I mean, I kind of changed my opinion on that a bit, where I started out and I was like, yeah, it doesn't matter. It doesn't matter at all. And then we have like the worst domain, right? We have like getivy.io. It's like a terrible domain. And now I don't know, but the past months I really thought, okay, fuck, I need to get a better domain. And it actually, there's something to it, to have like a clean.com domain. I don't know. I kind of pivoted on that one, and now I kind of feel that it is in fact priority. Probably shouldn't say it, because now the person with the ivy.com domain is going to raise prices by 30%. but I feel that way. Interesting. So staying in the backpack metaphor, and you've got the wallet, you've got the exchange. Anything else that kind of like that felt too big for the backpack so far, that when you reflect on a journey and you decided that wasn't part or shouldn't be part of that ecosystem? What were the harder choices there along the journey?
Things that shouldn't be part of the ecosystem. I mean, I guess I haven't really thought about, there's a bunch of stuff in crypto, right? There's, NFTs and the whole marketplaces, right? There's meme coins, there is DeFi, there is, the rich, but nascent ecosystem of like SocialFi. And I think really what we are trying to do really well is to focus on like custody and the financial vertical, where you can kind of think of Backpack as like a TVL app, right? It's ultimately a place to hold your crypto and then to use your crypto to do stuff. And so we've really taken that position. And so instead of trying to build our own L1 or our own L2 or our own DeFi product, we are really happy to really just focus on doing one thing really well, which is to be the safest, the most secure, and the most globally liquid place to get crypto in and out of your wallet or in and out of your brokerage account or savings account. The really elegant part of a wallet is it doesn't have to do everything. You can just have a wallet connection and have access to this like really rich global on-chain economy. And so I think that's a really nice way to focus on what matters, which is, ultimately security, custody, and getting assets in and out of the app, while providing a really rich experience where you get access to this whole ecosystem that we don't have to build ourselves.
Let's talk about the journey briefly. You mentioned your first job at Apple. There were a couple of others in there, right? You worked at Alameda, contributed to Solana, and many things that probably shaped the way you're building Backpack right now. Walk us and walk the audience through that journey and how it all ended up here.
Yeah, so I had my first job out of school. It was just like a junior programmer at Apple, just like working on, apps. And in 2017, there was that kind of big bull cycle. I read the Ethereum white paper, got nerd sniped, as a lot of people did. Jumped into crypto head first. Had no plan other than I knew I wanted to work on this like really cool Ethereum thing. I didn't know how deep it would go, but I just knew it was like the most exciting thing at the time. And then a trading firm by the name of Alameda Research calls me up, and they were in Berkeley at the time. And so I met the folks over there, and it seemed interesting. I didn't have a job. It was crypto related, and trading systems are interesting. And so I decided to join them. So I was there for a couple months. This is before FTX was even a thought. And eventually I left after about 3 months, and they went on to start FTX, and I went on to just explore crypto, working on everything from Ethereum L2s to new L1s, and really just, was working on the problems that I found most interesting. And fast forwarding to 2020, obviously they started investing in Solana. They got really excited about it. They called me up again and asked me to check it out and told me what they were building on Solana. And that's basically how I got introduced. And so I came back to Alameda at that time, really with the mandate to work on anything and everything on the network. So I worked on a lot of the early DeFi protocols. I worked on one of the first wallets. I worked on just a bunch of like first things to exist on the network. I built the first multisig and built the first developer framework and all these things when nothing existed. And so it was a really exciting time to work on Solana. And then obviously, fast forwarding to 22, like early 22, I obviously decided to build Backpack. This is before the collapse about a year before, maybe a little under a year. Yeah, and then eventually, obviously, FTX collapsed, and there's the whole story there. But that was kind of, I guess, the journey in.
What was, and maybe kind of like framing it this way, what was the most impressive thing about the Alameda team and then the FTX team as you've interfaced with them?
The most impressive thing, I mean, I think having the foresight. I mean, it's like it's an odd question, right? Because there's all of these like competing narratives around FTX and Alameda. A lot of them true, a lot of them not true. The truth is always somewhere in the middle. I don't know if you would define this as impressive. I think a lot of people would define this as reckless. But the defining characteristic was move fast and break things. That was definitely the defining characteristic. So yeah, I don't know if that was necessarily impressive or not, because I think that ethos is ultimately what led to its demise, and a big input into kind of the problems that were created there. But that, I think, is, what was one of the perhaps many defining kind of characteristics or attributes of that environment.
I mean, the history of like Backpack and FTX is kind of somewhat closely linked, right? Like you worked there, the crash was a big thing. We can talk about that in a minute for you guys. And now you've acquired FTX Europe to enter the European market. Are you building Backpack as sort of like a cultural antithesis to FTX, as in like, let's not move fast and break things, right? You talked about security in the beginning and how you prioritize all of these things. How do you feel that has shaped you and the way you build the team and the culture today?
Yeah, it's a great question. I mean, I think there's so many parts of us that are like the polar opposite of FTX, but then there's also so many parts of us that are very similar to FTX. And you're right in the money in the sense that our story is more or less inextricably linked, for better or worse. Obviously, I was employed by Alameda. There's various people in the company that were employed by FTX. It's certainly a big part of the origin story. We certainly wouldn't have built the exchange if it wasn't for the collapse. And that decision was motivated by ultimately just the desire to want to solve the problems that FTX exposed, right? Because these are problems that exist not only in crypto, not only in centralized exchanges. They're problems that have plagued finance for the past century, whether it's the 2008 financial crisis, the Great Depression, or anything in between. Brittle, opaque, financial systems with hidden debt, whether that's fraud or moral hazard, or one of the several different permutations that you've seen in the history of finance. A lot of these problems can just be solved with, the promise of the technology behind crypto, right? With trust minimization and transparency and verifiability and all of the things that allows blockchains to tick. And so really the goal from the beginning was to do what we could to solve those problems. And that there are so many people building on one side of the spectrum. There was the TradFi folks and the centralized exchanges building everything they were building. Then there was the DeFi folks and the crypto native folks really on the frontier of finance, building what they were building. But there's very few people that was taking the frontier of finance and the frontier of blockchains and applying them to traditional finance. And to me, that's a really important goal. If we were to do one thing, it's to ultimately bring that robustness, that trust minimization, and to imbue it into what makes, all of modern traditional finance tick. And so that was the underlying goal. But I'd be lying if I wasn't saying there wasn't a piece of it, that's just a redemption arc, right? We were, so many people were just hurt so badly from FTX, whether it's people that had their life savings on it, whether they were startups that had their treasuries on it, like us, whether it was the employees themselves, many of whom were great people who were also deeply impacted. And I mean, we were certainly impacted in, many different, like in all of those categories, basically. And so there's certainly a part of it that's just the desire to want to do something good and do something great and to not only solve these problems, but to also persevere. And I think that's a big part of the story.
I mean, talk to me about that situation, right? I think I've read somewhere that you guys had like 85% of your capital on FTX as it collapsed. How did that look? How did that feel? Walk me through that day.
Yeah. So I was in Lisbon, Portugal at the annual Breakpoint conference for Solana. And basically I was on the flight home. There's a bunch of crypto people from that conference. And basically learned about the hole on the balance sheet and the pausing of the withdrawals. And just learned about everything when everybody else did. And yeah, we had $14.5 million. That was 88% of our capital. The company was basically like dead in the water at that point because it just didn't have the cash. And yeah, it's one of those moments where, I mean, you stop and you ask yourself the question, okay, like, what do I do? How do I get out of this? And I mean, ultimately, you just came to the conclusion that, okay, this is quite bad. There's a lot of horrible things that will come out of this. But ultimately, no matter how bad a situation is, and no matter how big it is, no matter how small it is, I kind of just believe that you'll always make the same decision, right? It's like a fight or flight reaction. And so that's kind of a defining characteristic of oneself. And so if that's the case, then, well, what type of person do you want to be? Do you want to be the person that gives up, or do you want to be the person that keeps going? And so that was, I don't want to say a simple decision, but that was a clear decision to make. And I think everything after that moment was honestly very tunnel visioned. There wasn't really a lot of time to feel sorry for oneself or to even reflect, even till this day, to be honest. I think ultimately it was just sheer focus on what's next and how do you actually survive as a business, obviously as an individual as well. That's closely kind of, tied to these things. And so it was definitely a challenging moment for not only us, it was challenging for everyone, for the whole industry, for the whole Solana ecosystem. But yeah, the only way like through these things is just put your head down and get back to work. And I don't want to like trivialize it, but to be honest, I think it's kind of as simple as that.
What did you do? Like, did you lay off half of the team? Did you ship new products? Ask people to forego salary? Like, how did that work practically?
Yeah, we didn't lay off anyone. I stopped paying myself. So I forgoed salary. Tried to do a fundraise, a Lifeline fundraise, that we ended up not going down that path. We had at least one offer, but we politely declined it. Just seemed like there was a lot of hysteria and kind of, the market was just like clearly depressed and kind of figured it would rebound. We had some runway to get through the next couple months, but not much. And then basically the first milestone we hit was, obviously we did the Mad Lads NFT that got some cash into the company. And then eventually we did a proper fundraise. Once we bootstrapped the exchange, and that basically came from, we had a couple angel checks before the fundraise, a lot of personal savings went into that, and marched our way to the first fundraise. And that was an important milestone.
Was Mad Lads, was that born out of the necessity of getting money in, or was that something you want to do anyways, and that just was a good opportunity to timely do it? So
I mean, I would say it's more the latter, I suppose. Like, we had been building a community for quite some time. It's one of our first products was ultimately this concept of an XNFT that we since have shelved and pivoted away from. But really, Mad Lads was born out of that product experiment. So we basically said to ourselves, okay, we're going to build this XNFT protocol, then we should also build an NFT project to actually go through this as an example for a go-to-market. And so there was always this desire to do an NFT project. But yeah, that was kind of the initial motivation for doing the NFT.
That makes sense. Hey, looking at the time, let's talk about Europe briefly, right? You guys are coming to Europe. You've acquired FTX Europe. What's the rationale? Why are you doing this? Why now?
Yeah, I mean, I think, going back to what we were talking about earlier, when we decided to build the exchange, we wanted to do it, the right way. We wanted to do it above board. We wanted to solve all of the problems, not only from an engineering point of view that FTX showed, but also from a compliance point of view and a legal point of view and a social point of view. And so from the beginning, compliance has always been an important part of the business, not just product and not just engineering. And so, going live in Europe with a regulated exchange was always an important goal. Doing this in Japan, doing this in the US and in various parts of the world. And so as part of our kind of initial roadmap, when we decided to actually build the exchange as a product, we also created this regulatory roadmap. And the question was, okay, how do you go live in Europe given all the new regulations that are coming to light in the past few years, right? And what you've seen in Europe is a lot of the world's biggest crypto derivatives exchanges exit the market, right? Binance Derivatives has exited, Bybit Derivatives has exited. There's no Coinbase Derivatives isn't live. Robinhood doesn't have a live derivatives product. BitGet's not licensed, and so on and so forth. And so what you see today is one of the most important regions in the world, in the European Union, with no regulated perpetual futures product, which is the most important product, I would argue, in crypto, and very few exchanges that actually have the operational ability to meet the moment. And so it's something that we've been working on for over 2 years at this point to figure out actually how to do this properly. So acquiring FTX EU was one important piece of that puzzle. And then obviously getting the company live and working with the regulators to do it the right way is very challenging. It's not like you show up with a bag of cash, you get a company, and then you go live. There's a very rigorous diligence process that goes into all of this. But in any case, I mean, happy to finally kind of hit this milestone. We're now live and running in Europe, and we're looking to grow and open it up more and more over the next few weeks and the next few months, and very much looking forward to having a presence in the region. So yeah, that's kind of where we're at.
Yeah, and I also bought a regulated entity a year ago. So we know the whole change of control thing, and we went through that. Even though for us, it was a fairly simple and smooth process, right? I was extremely surprised how fast it went through. For us, approvals took like 5 weeks or 6 weeks, and I would have expected to take 3 months. How long did change of control take for you guys?
Yeah, it took longer than you would expect. I mean,
Yeah.
our whole process was so unique in the sense that we were buying a company. We initially tried to buy the company out of bankruptcy, and then we failed at doing that because we just couldn't get the money. We couldn't have a competitive bid, and eventually, the FTX EU founders had purchased the company out of bankruptcy, and then eventually we earned enough money just from as an operating business that we came back and acquired the company out and from the original founders of FTX EU. And so we kind of had a circuitous path to the end goal. And so from beginning to end, there's a bunch of details, obviously, with all the various parts of the process. It's taken over 2 years to get to the point.
What made it such a desirable target?
I mean, it's pretty simple calculus to me. Europe is just a very desirable place. It's one of the most important regions in the world. If you're building a crypto company, at least from my point of view, you should definitely prioritize Europe. And so the question is, how do you achieve that, and how do you do it in a compliant fashion? And so that was really the main question, right? It was kind of just as simple as that. I wanted to go live in Europe and figure out how to make that happen.
Makes sense. And how do you view the kind of like emerging competitive landscape in Europe, right? You mentioned like many of the incumbents, the larger players are not playing. We had Josh from One Trading on the show earlier this year, right? Who I think is also building a regulated on-chain perps exchange. Like who do you see playing, and how do you feel the market is evolving here?
I think the market is evolving around the world. I mean, Europe certainly is one of the leading kind of regions, but what we're seeing, and especially like the more developed, Western economies, the US, Europe, so on and so forth, is with clarity and with a very strong desire to create the rules of the road, it also becomes like the bar is set and the bar is very high. And this is what we're seeing in, I think, the world's largest kind of regions, right? Europe is a great example of this. US is another great example of this. Japan's another great example of this, where we're slowly but surely moving away from this world where everybody's using offshore, unregulated, centralized exchanges where you actually don't know what's happening. And I think that's a good thing. And we're seeing the rise of DeFi and decentralized exchanges, and we're seeing the rise of regulated market structure for the centralized players. And so it's ultimately the markets that are maturing that are developing like this. And I think that creates a ton of opportunities for the world's largest pools of capital to come into the space, opportunities for companies and founders to build great businesses, because nobody wants to build a company when there's no clarity. Just tell me what the rules are, I'll follow them. Just let me know. And I think that is a recipe for growth and a recipe for an exciting kind of a couple of years in crypto. So I think kind of that's the setup and what we're seeing today. And I think it'll take a couple of years for the second order effects of all this to actually play out, because it's only now just getting started, right? Kraken just went live with derivatives in Europe. Backpack just went live as the second exchange with derivatives in Europe. And, in the US, we're going to, slowly but surely see folks kind of enter that market. That's the starting line. And it'll be really exciting to see how it plays out as, the marathon proceeds.
You mentioned DeFi, and I think it's hard to talk about perps these days without thinking about decentralized exchanges. I mean, we've all followed the hyperliquid showdown over USDH over the weekend. And what's your take and what's your view on kind of like the question whether a centralized exchange like Backpack should borrow any design principles from decentralized exchanges? And if yes, like what are they? And what do you think?
Yeah, it's a great question. I mean, the short answer is yes. There's a ton of design principles to borrow from decentralized exchanges, and that's ultimately what Backpack has done. You have to ask yourself the question, like, what are the respective roles of these two products, right? A decentralized exchange, like a Hyperliquid, is a horizontal approach to a problem where you build one layer of the stack and then you allow everybody else to figure everything else out, right? You build the order book, you build the L1, and then you have like, the stable coin, and you have the mobile app, and you have the lending pools, and you have, all of DeFi that goes in there, and you have the wallets, and you have the websites and the validators, and it's all kind of this beautiful bazaar of heterogeneous services that are built on top. Those are all primitives in their protocols. They're not user relationships. The centralized exchange is the exact opposite approach. It's a vertical approach to something where you build not only the matching engine, but also the custody, but not just the custody, but also, you have the banking relationships and the payment relationships, and not only the banking and the payment relationships, but also, the relationships with not just crypto and all the constituent kind of chains and economies, but also traditional finance, whether it's a broker dealer and stocks or bonds or retirement accounts or IRAs, or, having, your own IBAN and bank account for every user. It's, obviously the mobile app and that relationship at the product level. And it's the customer support and the responsibility for the user, right? In the same way that you can pick up a phone and call, your local banker, you should be able to pick up a phone and call your exchange. And so all of these pieces kind of come together to build, I think, the centralized exchange product. And that's why the compliance piece is so important. It's because you're ultimately responsible for the user. The user is paying you for the service that you're providing, which is, much more high touch than a decentralized product, right? Which, if you lose your keys, you're kind of, out of luck. Nobody's going to help you. And the expectation is very different for a centralized exchange. And I think, ultimately what we'll see, and I think what a lot of exchanges like Backpack are doing is, this kind of concept of a DeFi mullet, where you have like, the centralized exchange in the front, but DeFi in the back, where, whether it's a lending protocol or the kind of, trading itself, you should be able to tap into these primitives on the back end while you still do all the things that users, love and care about on the front end. And so I think that is like a really like nice way to frame it. And then the question becomes, okay, how do you actually apply some of these DeFi principles to the architecture of the centralized exchange? And I think this is its own kind of very rich rabbit hole. I'm happy to go down it if you would like, but I think the way I would frame it is decentralized exchanges and blockchains are purpose-built database technologies for minimizing errors and minimizing risk in finance. They're the most robust, they're the most resilient, they're the most anti-fragile database systems for tracking money and for trading and for, borrow lending and for payments and for anything that touches assets. And so you can take these properties, which are desirable for any financial institution, and you can apply them to your bank or to your brokerage or to your exchange or to this weird mix of things that you might call the centralized exchange. And I think that's the philosophy that we've adopted over at Backpack, where we try to ultimately pick our lane. We're trying to be, a regulated player in the market, but also to apply what makes crypto so special from a technology point of view into the underlying infrastructure. And so it's this really interesting mix of worlds that emerges into kind of the product that we have today, where you have things like proof of reserves, where you have zero knowledge proofs over the entire exchange, not with, like quarterly financial statements that you might have from like a publicly traded company, but you have them every single day.
Yeah.
And not just every single day, how do you actually get real-time state integrity checks from an external party on the entire exchange itself? And that's like a milestone that we're working towards right now, where it starts looking and feeling a lot like DeFi, because we're able to apply a lot of these primitives to the context of a centralized exchange. And so, that's kind of our approach. And I think you can take the best of both worlds and build something great. And I think that's the future of finance. And it applies to not just crypto, but to, the world's economy more broadly. And so if there's one thing that we're to do, it's to show that you can do this, and that it's not just a DeFi thing. It's not just like a crypto thing, It's just the right way to build these systems. I would say that's ultimately kind of our end goal.
Armani, let's wrap it up with 3 quickfire questions. I'll shoot these questions and you got to give us a short answer. What's the most underrated thing about Solana?
Depends on who you ask. I think the most underrated thing about Solana right now in the current discourse is how important and how valuable the current liquidity base is. I think a lot of people are talking about L2s, they're talking about corporate chains, they're talking about apps that grow so large that they leave to build their own chains. But the network effect that exists on Solana is something that is going to continue to grow and get stronger and stronger over time, because as it currently stands, there's no other chain that not only has this liquidity base and also has the ability to scale compute and the execution environment to, meet the standards of mainstream consumer applications. And I think as we see crypto grow, as we see more and more things come on chain, this realization will become more and more important. And it's something that's very obvious. It's something that if you go back to 2017, 2018, and you talk to everybody in Ethereum, they would all pitch you this. But it's something that I think the world has, or the industry specifically, has kind of evolved a bit away from and has forgotten a bit about this just by virtue of just what people have been focusing on kind of in the recent meta. And so I think Solana's network effect in particular is going to continue to grow at a pace that I think few are expecting. And so I think over time, it will grow as utility on chain grows. And I think that is the one thing that I think everybody in Solana understands, but few people outside of Solana are weighing into their calculus.
What's the hardest thing about Europe?
I know you said rapid fire questions. That was not a very rapid fire answer. The hardest thing about Europe, I'd say the time zone. It's in the middle of the US and it's in the middle of Asia, which might be a good thing, but also maybe not so great a thing because it means that you can't sleep.
Appreciate that. What's one regulation you'd fast track today?
I think there's a ton of ambiguity on what it means to be DeFi and on what it means to be a mature blockchain system. There's a bunch of really great commentary and proposals from various folks, whether it's, the various market structure bills or, what's happening in the House or the Senate right now. But I think this question of what is a decentralized exchange is extremely ambiguous. And it's something that has it will have a lot of unintended consequences if this does not get answered. Because what we're seeing today is, I guess I'll say that a lot of decentralized exchanges just aren't so decentralized, right? There are real trade-offs being made, and there's no free lunch with most things. And so having an honest discourse around the security properties, whether it's custody risk, whether it's MEV, whether it's margin risk, whether it's market integrity and market structural issues, and really understanding what are the things that constitute DeFi. It might fall into one set of rules versus things that constitute maybe more traditional finance and fall into a separate set of rules. And the place that we find ourselves in today is that if you just call yourself decentralized, which nobody knows what that means, but if you just say you're decentralized as a marketing gimmick, then that's the magic wand that cures all ailments. But obviously that's not true. That is a momentary illusion that is the result of the mania that we find ourselves in. But I think that imprecision is ultimately harmful for the people that ultimately are using these apps and for founders and companies that just want to do things the right way. And so I don't think this is specific to crypto. It's not specific to this conversation. This is a byproduct of any new technology, anything that's pushing the frontier and changing the world, right? The world has to adapt and change to adjust its view on things that are genuinely new. And that's what the world is figuring out right now. But I think this is one of the most important things to get to the bottom of. One node might not be enough. A single sequencer might not be enough for a decentralized exchange. Is 3 enough? Well, if 3 is enough, is 5 enough? If 5's not enough, is it 10? Is it 20? Is it 1,000? Is a permission consortium chain enough? Does it have to be permissionless to operate at any part of the stack? What happens if I have an upgrade authority on the code? What happens if I have the ability to unilaterally change margin parameters? What happens if I'm the only one that runs a liquidator, right? There's a lot of details when it comes to analyzing financial systems, specifically margin systems, that have enormous implications on the security, the risk, and the custody of users' assets. And it's not as simple as saying, oh, it's decentralized or not decentralized. Maybe it might be as simple as distilling it down to censorship resistance. Maybe that's the thing. But I think nobody knows the answers to any of these questions. And it creates a momentary inefficiency in the market where it's really just the most aggressive people that are very risk-seeking, that are happy to take advantage of the ambiguity. But ultimately, it's not good for just the industry to not have the clear rules. And so I think these questions will all be resolved. I think people understand this, and there's very clearly an appetite to address these things. But I think this is kind of the question that, a lot of people ask themselves. It's certainly something I ask, and if I had to ask for one thing to get clarity on, it might be this.
Armani, thank you so much for joining us. We're already over time. This was such a fun episode. Wishing you all the best in Europe. I think and I hope it's going to be amazing. And to everyone who listened, see you soon. Thanks for tuning in.
Thank you very much.